Hey everyone, Greg the insurance guy here, and what I wanted to do was just make a quick video, should be under 10 minutes or so, but we'll see, of a question I've heard before, which is which whole life product is best for investing? And based on my, I guess you could say it is sort of a bias, but just based on my research, I would recommend a participating whole life insurance product. And hopefully this presentation can get you to see the reasons why. But again, it is up to you to determine what product you would want. I just want to provide some information just so you can make a better educated decision. So here's just some basic information here. Again, definition. Participating whole life insurance is a life insurance product that actually pays dividends to policyholders. It combines lifelong coverage with potential for dividend payments, and also has a guaranteed death benefit, cash value accumulation, and dividends. Now, the premium payments are fixed and consistent for the life of the policy, and that's actually really good because some insurance products you don't have a fixed premium, so you don't know if it will stay the same or it could change or increase over years. And obviously the life changes to where you may have additional bills and things that you did not anticipate for, and then now you have this higher premium that it may cause you to cancel the policy or something. So again, it's fixed, so you can actually calculate that in your budget when you are looking at other things and other bills that you have. Also, the cash value accumulates on a tax deferred basis. And dividend payments are typically declared annually by the insurer based on the insurance company as they invest in other types of assets. When they see returns on those assets, they actually pass that down to the policyholder as well. Since it's a participating whole life product, you're participating in the growth of that. Now, dividend options for policyholders, this is actually good because it's also flexible. You have cash payments where you can literally receive dividend as cash. You have premium reduction to where based on what your premium is that you're paying, the dividends that you get can actually reduce those premiums. So let's say if you're paying, let's just say $300 a month, and maybe, when you get the premiums, you can reduce that to like $250 or something, $275 or even lower. It just depends, right, on what the company pays in dividends. You can accumulate at interest, which leaves dividends with the insurer to earn interest. And the most popular of these dividend options is the paid up additions rider, PUA for short, which you can purchase additional coverage to increase the death benefit and cash value. So this is what most people use as far as when it comes to investing and to the debt-free life or using it as a banking on yourself. The paid up additions rider is the most common. That's the one I would recommend, also I use as well. Now again, some more benefits of using a participating whole life insurance product is stability. Again, you have a guaranteed death benefit and cash value, so those both are guaranteed as it accumulates in your account. Flexibility, multiple dividend options to meet changing needs, just like we went over on the previous slide. You also have long-term growth, so potential for higher cash value accumulation through dividends. And tax advantages, again, as previously stated, they're tax deferred growth and a tax-free benefit paid to your beneficiary. So they don't have to pay taxes on the amount that they would get. Like if they have if you have $100,000 death benefit and you were to pass away, your beneficiary would get that $100,000 tax-free. So who is an ideal candidate, or I should say, client candidate for a participating whole life product? So people who want stability, those looking for a reliable financial product with guaranteed benefits that doesn't change or fluctuate on you. Also long-term savers, so people who are focused on building cash over time. So again, think about if you put money in a savings account, it actually loses and depreciates value every day, versus if you just switch that over and put it here. So you have a life insurance product with the death benefit, but it also has the benefit of cash accumulation. So you can see it growing versus losing money. Also, estate planners, high net worth individuals interested in efficient wealth transfer. And last but certainly not least, or all of these are just some of the main options, parents and grandparents. You can provide financial security and legacy for future generations. Now, it's really good when you get one of these types of policies for maybe a grandchild or a young child that's 0 years old, for newborn, and you're paying $15-20 a month, and by the time that newborn, the boy or girl is of age, maybe 18-20 years old, they can use that money for whatever they need, whether they go to college or they can use it for investing in a business or something like that, or buying assets themselves. So that's actually a really powerful vehicle. Now, when you compare this product to other life insurance products, again, everybody will tell you why their product is the best, even though I told you I was biased in the beginning. I want to at least just show you, these are just some of the other things that people may not think about when they look at insurance products. So again, like before a participating whole life insurance product, you have a guaranteed death benefit with potential dividends and access to your cash value in year one, adding on the paid up additions rider to that. Just traditional whole life product, this is what most people are used to and why they say stay away from whole life, because things from like the 70s and 80s that don't really apply anymore when you actually know how to use this vehicle and it's set up correctly. That one has guaranteed death benefit but no dividends. It could take 2 to 3 years to actually access the cash value, and it has no paid up additions rider, so it's not really flexible, but it's still a vehicle out there. Universal life insurance, this is what seems to be very popular in today's world. Again, you have flexible premiums with this product. You do have the potential of higher cash value growth, but it does come with more risk. So if you're thinking about an IUL, I highly recommend doing your due diligence. You'll speak with some licensed insurance brokers and just taking time to look at the differences between these products and make sure that you do select the one that's best for you, and look at all the hidden text and fine print. Make sure you read through all of that, because the universal life product, you can actually, premiums can increase over time. You don't have guaranteed cash growth, so just keep that in mind. And then term life, this is again what most people are familiar with, what most people have, where you have a 10, 20, or 30-year term, which again, the benefits is they're lower premiums, but it has no cash value or dividends, and it does terminate after that period is over. So after 10 years, if you're still alive, unfortunately, right, you have zero coverage. If you're alive, if you get a 20 or 30-year policy, same thing. If you're healthy and you're alive after that cutoff, now you're starting right back over. And then when you want to get another policy, now you're going to pay higher premiums, and that's the downside of term life. So what are some potential drawbacks of participating in whole life insurance product? Again, they are looked at, seen as being having higher premiums compared to term life and other types of permanent insurance products. The dividend variability. Dividends are not guaranteed and depend on the insurer's performance. But this is with any type of vehicle that you use, right? And again, remember, this is an insurance product first, and then it has the cash value second. So always remember that this is an insurance product. So don't look at it as if it's guaranteed for you to grow your cash and everything. But if you stick with a good, reputable insurance company that's been around for 100, 150 years and always pay dividends, they generally know what they're doing, so you can have more of a predictability of getting that dividend versus not. So again, you want to make sure you go with a reputable company, and typically insurance brokers who focus on this only stick with those good companies, including myself. And also surrender charges. Again, it may apply if the policy is surrendered in the early years, which means that you do pay surrender charges, which can be pretty substantial if you surrender the policy and just want to convert it to cash. That you do have to pay a lot of fees for that. So just keep that in mind. Now, what I want to do is end with just showing you a quick case study. This is just a quick example. This is just showing you how the cash value can accumulate in an account. And again, now this is just a basic type of policy to where, let's say if you have an extra $500 a month that you're putting into a savings account. Again, like as you said earlier, you get less than 1% of growth on that money. Banks can do what's called fractional reserve lending, to where they can lend out about 10 times of what you put in to this. So you put in $500, they're lending out $5,000, and they're earning all the interest on your money. You take all the risk and they get all the benefits. So keep that in mind. So let's just say, for example, after all your bills are paid, you comfortably are putting $500 away a month, right? So here's an example. So let's say instead of putting it in a savings account, you put that in a participating whole life product. So again, you're paying $500 a month. Let's just assume that 65% of that goes to your paid up addition rider, which is the cash accumulation, the cash value piece. So annually, you're paying $6,000 annually, right? $500 a month. And annual paid up addition rider, again, 65% of that is $3,900. And let's just assume that the cash growth rate is 4% a year, death benefit growth rate is 2% a year, and your initial death benefit is $100,000. Okay, so we have all that. Again, you can take a screenshot of this, or if you want to just pause this or look at it later just so you can get an understanding. Or I'm available as well if you need to speak to me. So then here's just a chart breakdown as far as the visual. Same assumptions over to the right. But if you look here, you see your years from 1 to 25. You see your total premiums paid. Obviously, year 1 you paid $6,000. Year 2 you've paid $12,000 total. Now again, this is not that you're paying $12,000 in year 2 or $18,000 in year 3. This is a cumulative. Okay, so $6,000 per year. So you do 6,000 times 2 for the second year is 12,000. You do 6,000 times 3. I mean, you paid 18,000 total, okay? So you do that all the way down to year 25, which means over 25 years, you would have put a total of $150,000 into the premiums that you're paying. And this is for a $100,000 death benefit. Now, if you look at your cash value and your death benefit, you see your cash value accumulates and it compounds every year as, again, you get dividends and interest. So that means by year 25, you can see there you would actually have more cash value than what you actually paid in premium. So you have $162,000 of cash value when you paid $150,000, and then also you see your death benefit increased by $60,000. Again, it's just assuming that the company will pay dividend as an interest there. So that's the benefit of a whole life policy. So in conclusion, the benefits of having a participating whole life policy is that it's stable, you have flexibility, and the potential for growth. And if you would like to discuss more to see if you would qualify for this and to see if you're a good fit for this product, you can reach me at 844-755-3540 or go to my website and fill out the request form or scan this QR code, and I'll be able to contact you and assess your needs to see if we can get you set up with the participating whole life policy. Okay, well, this is Greg the Insurance Guy signing off. You have a good day.